We're up 5 points as the 10-year, guys, yields back to 153. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Meandering around a little bit. We're trying to get to new highs, but the market's not cooperating. It's been an issue for a couple of months. Look at the sectors. The problem is the big winners this month, REITs, energy, up nicely. They're tiny market caps. They don't move the market much. Tech moves the market. Banks move the market, but they're only up fractionally. So the S&P is up about a half a point overall on the month. Still trying to break out. Look at the S&P here. 42.32, as I recall, was the old 52-week closing high, the historic high. That was back a while ago. And really, we've been sideways here. There's the S&P year to date, essentially sideways for nearly 2 months. We sense that the market wants to go higher, but there are a number of things that are sort of preventing that. The most compelling argument isn't necessarily the Fed issue. It's the whole peak story. We talked about this 2 months ago, and this corresponds to when the market essentially started going sideways. The peak story is, remember what moves the markets: earnings, dividends, and the multiple. The earnings are increasing, but they're not really moving up as fast as they were. So the second quarter is going to be the peak of everything here, and there's a difference between earnings growing and accelerating and earnings growing but decelerating. And beginning in the third quarter, it's going to be growing but decelerating. Dividends are stable. That's good. Multiple is lower. It was 23 a few months ago. Now it's 20. So you can't push the multiple up. And it's harder to argue that earnings are accelerating at this point. The mother of all second quarter earnings is about to be on us right now. And that's why nobody is selling. These are just spectacular numbers. Look at this, up 63% today for the second quarter. You're never going to see numbers like this. And that's even compared to where it was on April 1st when it's up 54%. But you see the third quarter, it's lower, decelerating. Now, that's understandable. You can't go up 50% on every quarter. It's just not going to work that way. But that's the key point here on the deceleration part of this whole story here. So the peak earnings story, the peak everything story, I think has some resonance, even though it's a story that's 2 months old. A lot of discussion this morning, my heavens, just coming in amongst people walking around on the floor and talking to people here about that DOJ seizure of Bitcoin from Colonial Pipeline and the hackers there. They did obtain the private key of the hackers' Bitcoin wallets. A lot of people seem to be saying to me, oh, well, they've hacked into Bitcoin. No, they obtained the private key. That's the password. There's a big difference. The question is, how did they get that? The obvious explanation, the simple one, is that the hackers shared the password among themselves, and it's that communication that was intercepted. Now, we don't know that, but that's the obvious explanation. The other one is they hacked into the infrastructure somehow of Bitcoin overall, and that would be a very big story. I don't think so, though. That seems a little bit unlikely. At any rate, not to be boorish, but we've had peak crypto already, at least in the investable part of the market, the stock part of the market. If you look at the stuff, there's not a lot that's really obvious there. MicroStrategy, Riot, Galaxy, Coinbase, Voyager Digital. Look at this, 30, 40, 50, 60% off of the highs. There's an ETF for that. The highs were all back in February. If you look at the main one there, that's BLOK. That hit the highs in February. Titanic volume. January, February, March. And, Carl, it's been down since then. The volume's dropped off considerably. Bitcoin's still hot, but those investable products off of the blockchain, not so hot.
Shepard Smith here. Thanks for watching CNBC on YouTube.